What happened? I don't know what happened, guys. So I don't know. I just lost the meeting.
Back.
All right, can you hear me okay?
Yes.
I'm gonna share something with you, then I'm gonna turn the meeting back over to you. Markets change. We're in Florida, and I was saying you might not have been in real estate long enough to see the markets change. The markets change. And so the Wall Street Journal came out with an article that said our market was the worst one in the country.
Wow.
You watch Gary Keller from Keller Williams give the vision speech, and he gives a overall of the market. And he shows individual sales prices can go up and down, right? Markets change. He shows a 4% line. And that 4% is on average. Real estate will go up over time on an average 4%. So you all buy that idea, right? There's some people that get into real estate and they have a win. There's some people that buy real estate and they don't have a win. What's the difference? I have a great analogy or parallel for you on this, and I want you to let me know what you think. We were just talking before you guys came on, different parallels and analogies. So I used, because my wife had flown in for this, and she loves music. Man alive, where's all these people? Louise, you're not co-host, are you?
I got it, Denny.
Okay.
I got it.
All right.
Thanks, Don.
So I use the analogy, guys, of this, of going to a concert. My wife likes the concerts. Bob Seger's one of her favorite, right? I don't even think he's touring anymore. But here's the thing. When an event comes out, I don't care what it is, sporting event or a concert, you have the opportunity to buy tickets. Is there a set price on the tickets? Yes. You buy your tickets. Maybe it's Bob Seger. Maybe it's a Super Bowl. Over time, between the time they release the tickets to the event, is it possible that ticket prices can change?
Yep.
All right. So by the time someone buys a property and then or is thinking about buying a property and making the decision, can the property value change?
Yep.
What's the difference? Here's the thing.
Supply and demand.
Well, yeah, but here's what I'm looking for, guys. It is supply and demand, but timing is everything in real estate. For example, there is a difference between a story and the story. I'm going to use the men's hockey team, the U.S. hockey team. If you're from Canada, I'm sorry, I'm using this example. They won the game 2-1 in overtime. How many people saw that? Remember that? Saw it on the news. And I know the women won too. That's the story. But there was a lot of articles, particularly from the people who didn't win the game, that came out and talked about that Canada was a better team because they had 42 shots on goal and the United States only had 28. That is a story, not the story. You understand what I'm saying? I use the movie analogy. I showed a 1-minute movie clip of Apollo 13. It came out like 30 years ago with Tom Hanks and Kevin Bacon. It was a true story. They had an explosion. Our real estate market had an explosion. And so the story where we are, and this is almost true across the country, you guys, you saw an uptick during the COVID years. Now, some markets out there, and I'm talking to you, are still kind of level. Our market went nuts, so we had a 60, 70, 80% bump in price. Got that? Now, people who bought during that time, that's like buying the ticket to the Super Bowl, and and maybe when they first came out and the prices go up. But if you don't, if you hang on to that and you sell it when prices are up, you win. But what happens, you guys? You've got the ticket to the Super Bowl. What happens if you find the wrong time to sell it? Like, for example, no, I'm going to wait to the day of the game. I'm sure that I'm going to get more money. Maybe, maybe not. What if you wait until after the first quarter? What if you wait till after the first half? What if you have a ticket and the game is over? What's it worth?
Nothing.
Now, here's a parallel. When someone buys real estate, if they're going to make money on it, it's 100% relevant on timing. That's it. That's all. Now, but the only difference of real estate is there's not an expiration date. Like the Super Bowl ticket expires when the game is over. So we've had, and I've been able to determine in my market, 2002, if I'm going on a listing presentation and they've owned a property prior to 2002, I said, listen, you've got bags of cash on your front porch. Why? Because there was that run up because of COVID. It's still there. And then we have people who bought after 2002 that have no equity. In fact, they have negative equity. We're starting to see more and more people that are upside down. You might find that in your marketplace. The media is going to want to report on the people that bought the tickets at the wrong time. And then we're going to associate with a bad market. It's not a bad market. It is bad timing. Do you understand that? The market, there's no bad or good. It's all about timing. So we have more people making money in this market than losing money, but the media will report the negative, and therefore these people are thinking, well, I'm not stepping into that market. It's bad. Your people, your buyers and sellers are guaranteed to win in this market if they wait for the right time to what? Sell. So all this ups and down things, it really depends on the timing. That's it. What about interest rates? What about the war? What's going on? It's all about timing. Now that's simple. I'm not giving you rocket science. If you want to be really good at your listing and buyer appointments, and maintain sanity, what you want to be able to do is understand fundamental truths into your bones and be able to communicate it on the simplest of levels. So if someone wants to step into the market because it's a bad market, it's no such thing as a bad market. It's only timing related. So if you want to step into a downward moving market and sell as it's moving down, then it's probably not going to benefit you. For example, I'll give you another parallel. I didn't think of this last night. Anybody play golf? If you want to play golf when the sun is up, good luck. I mean, you can do that. But what if you want to play golf at 3 a.m. in the morning? You can't do it. Why? Timing. Now, people have to sometimes buy and they think you're going to be there to get transferred. I understand. But if they get transferred at the wrong time, is it the market? No, it's their timing. So that's it. That's my sermonette.
So Denny, I hear you and I understand where you're going at, but how do you role play that into the listing presentation?
All right. Challenge me. Be a seller or be a buyer.
So should I say, Denny, I am not going to list my house because the war, with the current administration, yada, yada, yada. So we're not going to do it.
Okay. Well, obviously, let's say the war wasn't going on. Now, I'm not getting away from fundamentals. Remember, what do you have? You get clarity, you get isolate clarity, blah, blah, blah. So what motivation? Why let's say the war is over. Why did you want to move in the first place?
Downsize.
Okay. And so if you want to downsize it, are you going to buy something else?
No, I'm probably going to rent.
Okay, all right. So now this is important because if they're not going to buy, I have to take a different highway now. Like buy low, sell low, buy high, or sell high, buy high. Okay, that's awesome. Okay, so then you don't feel it's the right time for you, correct?
Yeah.
So how will I know? How will you know? How will I know when the right time is?
When I could sell it for XYZ.
Okay. And is that XYZ number ever existed?
Well, I'm hearing that its interest rate is still high. And,
okay, but now
and the gas prices is ridiculous here.
All right, now we're Susan's just trying to be mean, and she started with the war. She went into gas prices. She now interest rates, and so she is. If you have somebody that's loony, find an agent out there you don't like, and hey, I've got the right agent for you. Just refer them to the agent you don't like. However, here's the thing that I want you to understand. And Susan was right to press me on it. Now you've got a seller. This is happening. Somebody who bought, now they can't get their money back. So let's role play that, because a lot of you guys have been in real estate 10 years or so. You've never had to worry about negative equity.
Okay, I'll be the seller, then you be the agent.
All right, let's go, Tanner.
All right. So, so Danny, we're gonna have to. We're not in a rush, obviously. You know, we want to sell, but right now it doesn't seem to be the right market.
Okay. And when you sell, what do you guys follow with me? If they're selling for a reason, what he's saying to me, I want a root canal, but I'm not going to do it now. Well, no one just raises their hand and says, I want a root canal, right? You all get me on this? You've got to have a reason. They've got to have a reason they want to sell. Because when you move, it's like a root canal, because the worst day of the year, it rains, it snows, whatever, on moving day. So what has you thinking about selling?
Good question, Danny. Well, eventually we want to get out of here, though. We just we feel like it was not what we expected. Put it that way. But also, we don't want to sell it in this market because it's kind of discouraging.
Okay. Tell me more about that.
I paid 500 3 years ago.
Yep.
And right now, it's kind of, like it doesn't look like I'll get what I need. Let me put it that way.
Okay. Now, all right. So now listen, I'm going to isolate Tanner. I want to include you. I want to know if we're paralleling thoughts. I want, you can do your microphone. We've got a lot of friendly faces here. I want you to try to be me. Think what would be the question to go? Say their last statement again, Tanner.
So
You paid 500 at the right time.
we don't think we're gonna get the money that we actually.
Okay. All right, huddle up with me. What question? Where would you go with that? Where he is right now, Maria? Where would you go?
I will say, how important is it to you to get that number?
Okay. Hang on to that question. So I'm going to go in a different direction, but they come back to that. Okay. So Tanner, you said you won 500. Is that what you're saying?
I mean, ideal at
Well, you paid 500, right?
500. So if I can get around a little more, that would be ideal. But right now, it doesn't look like.
What now? Because there's a number. I'm going to find out what the gap is. What's the delta? So you don't think that you can get 500? What can you get for it?
Around force, like a low force.
Okay. So based on that information, then what do you want to do?
Well, that's the reason, we're thinking towards waiting.
Okay.
But at the same time, we really want to get out of it.
Well, if you're in a car and you watch somebody get in the car and start it up, and they had their foot on the gas and the foot on the brake at the same time, what would you advise them to do? Now, Tanner and I were just talking about the analogies. They just come to me. I don't have these memorized. I've never said that before. But I picture. Can you picture? It's very normal to have someone, well, I want to do this, but this. So what advice would you give your friend that had their foot on the gas and foot on the brake at the same time? Tanner?
Oh, me?
Yeah.
Denny, I find out that quite often people have situations that they don't want to share upfront.
I'm role playing with you.
So you're the agent now? I'm the agent.
No, you're not the agent. You're the agent. No. You're the buyer or seller. You're the seller. Well, what would you do if a friend had a foot on the gas, a foot on the brake? What would you do?
It's a tough call, Danny. I know it's not the most comfortable situation, but
All right, hold on. I'm gonna go back. I'm letting everyone in. What's going on in my mind? I'm finding out if he's going to be in reality. I'm not trying to solve a problem he doesn't know he has. I don't know where to drive yet. He's got a foot on the gas and a foot on the brake. I'm asking if a friend, all right, so your friend, what?
I'll tell him most likely
Make,
make a decision. You want to stop.
yes, make a decision. That's the answer I'm looking for. All right, so in your situation, what is the given? Number one, your value is below what you want. True?
That is correct.
You're saying it's low 400s. Let's say it's $75,000 lower. Would that be fair?
Yes.
All right. So, all right, I want you guys to now think with me. Think with me. What's going through my brain right now? What would you be thinking? What would you want to ask next? Polina? Louise, you got your hand up.
Yeah, I do. I would want to know, hey, Tanner, given that information, what has you thinking of moving?
Well, you're going into motivation. We've talked about that a little bit, and that is a good road to go down. But short of that, I'm thinking something else. We'll go back to that because that's the road you want to drive on, Louise. So hang on to that thought. Polina,
What's plan B?
what?
What's plan B?
Okay.
What happens, like you want to sell, but you know that your value is not up there.
All right.
What's plan B if it doesn't, and the value doesn't, you're not getting the value? Can you hold on to the property? And what happens when you don't?
Well, okay. Well, there's a lot of questions right there.
I know.
Here's what for me, the logical building block is this. There's a shortage between what he wants and what the market will give. Is that unusual? No, not in Florida. It's not. So here's where I'm going first. Tanner, the gap, let's say it's 425, your goal is 500. Is that even doable? I want to find out if it's an objection or a condition. Because if he can't do it, there's no way for him to do it. Maybe all those other questions would be, unnecessary. So I don't know if Tanner, there's a $75,000 gap between your expectations and the market. Is it even financially possible you could do that?
It's very challenging. Challenging.
All right, now here's what we talked about this morning on the recon. Did he answer my question? No. All right. But I'm gonna press him, not using my words. I'm gonna press him on his words. I said, is it possible? He says it's challenging. All right. The logical question would be, Tanner, what's challenging about it?
For me to make the move, I need to walk away just with a little bit so I could move somewhere else. And right now, that force, whatever that is, kind of put him in a very tough situation that I'm not going to be able to move.
Now, notice in this conversation, we haven't even discussed property values yet, right? I haven't shown him comps. Why? I'm working off his working knowledge. Do you see the power in that? Maybe he's right, maybe he's wrong. Maybe he can get 475. But here's what I want to satisfy first. Rather than me coming in and say, well, we can get 475. I want to find out what is in his mind, what is the gap, and is it even possible to make up? Because if he could says, well, it's going to be challenging, but I can do it because I don't really have a mortgage, whatever. Well, if it's worth more than that, it's probably going to be a layup. So all right. So do y'all understand that? Any questions on my thought there? Joel, what's on your mind?
I was going to ask, what's the lowest he's willing to take?
Now, interesting point on that question. If you ask that question, this is just my thinking on it. You guys can pipe in if you want, but this is where my mind goes on that, and maybe my preconditioned thinking. Sometimes I worry, and you might be wanting to know that answer, but they in their mind, I don't know that they'd give you the honest answer because they fear, in my mind, they fear if they give you that number, that's how hard you'll fight. Does that make sense?
Yeah.
So rather, there's another way to ask it. Now how low, how far down would you go? I mean, when I find out if he's able to do it, and I can, I'm going to ask that a different way, Joel. So sit tight. Polina, what's your question?
Was just curious when you say what is that difference even doable between 425 and 500? I guess that question, when you ask me, I think, well, it is your job to get me that amount. Aren't you the professional?
Okay. Well, we can toggle to that in a second. Here's what he said, though. He said, well, it's going to be challenging. Why is it going to be challenging? Well, I need to walk away. Now, what are the words he used? You got to listen. Write it down if you need to. I don't want you to say it. Who picked up the words he used?
He needs a little bit.
Boom. Debbie, was
Yeah.
that you?
Yeah, that was me.
Did you write that down?
I didn't write it down. I just remembered, but
Yes. I
Mhm.
need a little bit. See, what I think, this is mastery level, you guys. Before we start pulling arrows out and doing our judo stuff on these people, let's empty their brain first. What's
So
a
what's-
little bit mean to
That-
you?
that's what I was just about to say.
Right.
Yeah.
Now we're tracking.
How much? How much is a
What do you
little
mean
bit?
by a little bit, Tanner?
Around 10, 15K. 15 would be ideal. A minimum 10K.
All right. All right. Now, here's where my mind's going. So I'm talking to you guys. We're all in the same room. And all of us are teaming up against Tanner. He needs to walk away with $10,000 or $15,000. What's your brain ask? How's your brain calculating this? What does this mean? What does that mean to you?
Well, we have to know what he has left owing on the property, don't we?
Yes, yes, you're exactly right. I mean, how's he figuring that out? Y'all see? What we're doing is, I know we're like, remembers Felix the cat. I mean, oh my gosh, I do. That was my cartoon. He had
Yeah, I remember.
a magic bag of tricks. You guys, we are too quick to go into our bag of tricks rather than getting into his brain. All right. So, well, you said you need to walk away with 10 or 15. Okay. So how are you coming up with what is your equity position right now in your house, Tanner?
So we bought it at 500. You know, initially I put 10% down when I bought it.
Yep.
So for me to really, realistically to walk away with that number, I would need to sell around like probably 500.
Well, we know that. Come on, we've already around that tree. But how are you coming around with $15,000? What number would you have to sell that to get it 15?
Has to be around 500.
Okay, then that means you must have. Where's the rest of the money going? See, you guys out there, isn't that what's going through your mind? How does he get 10 or 15 grand?
I need 10, 15
it-
to cover up my next move with the rental deposits and all that. Then,
If he's selling fairly recently and he only put 10% down, then he would be right. Because I mean, you got to take what he owes, add the 15,000 of that, and then you kind of have to add into that on top of that the 9% that you got to take into account realtor fees and closing costs and things like that.
Yeah, but you're getting way too cerebral. He said he bought it for 500, put 10% down, put 50 grand down, but he hasn't talked about his mortgage yet.
Right. Well, I mean, I know that he hasn't said that, but I'm just saying that if he's saying it has to be 500,000, well, if he only put the 10% down, he's selling almost immediately, then he would be right in that range.
Okay, but we need him to say that. So you're tracking with
I
me on the
understand.
numbers. I'm trying to put the puzzle together. So how are you saying you're going to, if you sell it 500, you got 500. How much is your mortgage amount, Tanner?
well, it's about 3K, $3,000 with everything.
No, not your payment, your principal balance.
About 2,000 and change.
Am I speaking English here?
Oh, no. He wants to know how much do you have left owing on the
How much
house?
do you owe?
What is your current payoff, basically?
Yeah, what? Yeah.
Yeah, thanks, guys. Thanks.
What do you owe the bank?
So then it's in the like so 435. Say let's put it that way, around 4.
Okay. All right, now here's the interesting thing. That's less. Now, Robert was doing this calculation in his mind, which was fine, but Robert's calculation's off, right? Well, maybe Tanner's off. Maybe he's off on his payoff. You see what I'm doing here, and I don't want to take up the whole time if you're not finding this beneficial. What I'm attempting to do is get as much information from him, like Spock with that Vulcan thing. I'm trying to have him brain dump as much into me so I understand how he's coming up with his numbers. I'll have a better idea how to do surgery if he keeps talking. All right, so you owe 435, right?
That's the bounce. That's correct.
And if you sell it, there's going to be like Robert said, 9%, or there's going to be a factor. You may have. So let's make it around, Robert. So what would that be?
495, 495, 494.505 is the amount, but I mean 495 would clear him what he needs.
Based on what closing cost?
That's taking into account a 3% closing cost. I mean, 3% closing costs, 6% realtor fees.
Okay, all right. So he would have to sell to 495. I'll just trust you on the math. Now, let's say we got to that point. So we'll go back to the beginning. He said, I need to sell to 500 in order for it to make sense for me to get me $15,000 in order to make the move. And maybe we could sell to 495, right? That's what he would need. He would think the market's at 425. Let's just assume right now for this role play. And I'll turn it over. We'll get one question. Just kind of raise your digital hand. I'm going to go in order. So I'm going to give you a question, and we're going to go in sequence here, okay? Market value is 425 to 450. He needs to sell it at 495 to get what he needs. And raise your hand. I want to go, and let's go in a series of questions. How would you continue this conversation with a seller? I see no hands. All right, Susan, question, please.
So, Robert, what happened if you don't sell it at
It's
495?
not Robert, it's Tanner.
Oh, Tanner, what happened if you don't sell it for 495?
I mean, we'll just wait, I guess. That's the B plan.
All right, next question. Susan, you can come back around, but you get one question at a time. Who's next for the question?
Tanner, do you need to sell in order to buy?
No, I'm not buying anymore. Just like in a perfect world, I just want to get rid of it.
Tell
Next.
me more. Tell me more what the wait period is.
That's a good question. Probably at least a year.
Tanner, what's important about the $10,000 to $15,000?
So I can make the next move. I can relocate.
Okay. And is there an option to relocate if we can't net you that $10,000 to $15,000?
Sorry, I didn't understand.
That's right. Hey, Robert, we're going one at a time. Nice to cut in line, though. All right, Nina, get your digital hand up. I'm just going to call it digital hands. Just put it up. So
Okay,
Nina,
is keeping the property an option?
Good question.
Tanner?
Keeping the property, ideally, I don't want to, but at this time, I'm kind of obligated to.
Okay.
Susan, you still have your hand up. You got a question?
So, Tanner, if keeping the property is really not an option, how would be holding the property? How long will you hold the property until you sell it at what it's cost?
Probably I'll give it 1 year at the most. And
1 year at the most.
I have to figure out something after that, but at least.
So basically, you're gonna deplete more of your
That's two questions.
asset.
Cheater, pants on fire.
So,
All
you,
right,
so
Polina.
sorry, let me finish. So you're gonna deplete more of your asset before you decide to let go.
Well, I pay right now for it. It's not like it's in default or anything, but I would want to get rid of it as soon as possible, and I'll give it at least 1 more year to see where it goes.
Okay.
So why don't we do that now?
Hang on, Susan. I know you're from California, but all right. So Polina, now I want you to the question you said a minute ago. I'm going to transfer Tanner's personality or situation to Polina. Now, Polina, bring up the question. Well, you're supposed to do magic tricks. What'd you say?
Yes, Danny, it's your job to get the amount to get me the top dollar, the numbers that I need. How are you gonna get that?
Now she's the seller. Who's got the next question? Raise your hand, guys, and you keep your hand up if you have more than one. I just want to get everybody in order. Come on. There's no bad questions. They're just better ones. All right, Deb.
We can't predict the market. We don't know where the market's going to be in a year. So
Yeah,
what if you,
that's not a question.
no, okay. So what if you can't get your number in a year?
Polina, you're the seller.
I have to sell the home.
You're the expert. Why can't you do it? All right, Daniel.
Now, let me ask you this, Paulina. If we're at a car dealership, the sticker
He's using
price,
the parallel. All right, let's hear this.
let's say the sticker price is 30,000, right? I'm helping you buy this car and you want to pay 15,000. Do you think there's a possibility that I can make that happen for you?
If you use your negotiation skills, yeah.
Okay, Tanner, Tanner gets to ask a question.
All right, so I would ask probably, what if the market says no for a year or more?
Mm-hmm.
But that's not really on track with what she's expecting you to be, Superman. Susan.
Oh my gosh. Paulina, you're asking me a very tough question. If I have a crystal ball, I would be sitting here right now.
We're not allowed to use crystal balls.
What do you use instead? I don't know.
All right, Don, you had your hand up. What's your question?
I took it down. It got asked.
Okay. So you had a kind of a cool little question there. Who had it? Where are you, Dan? Was it Daniel?
Yeah, Daniel.
I don't see it, but anyway, so he's in a parallel. All right, let's see. Let's think about parallels. Parallels is a good way when someone asks you to do something that is kind of impossible or hard to do, and rather than taking the approach that, I don't have a crystal ball, blah blah blah. A parallel is a great way to do it. So let's use our brain cells. How many people can come up with a parallel? There would only be probably 10,000 different options here. So Daniel, go ahead and give yours again.
So mine was, let's say we're at a car dealership and I'm helping you buy a car. The car you want is stickered at 30,000 and you're telling me you want to pay 15,000.
Now all right. So I love the fact he's going to a parallel. There's
selling the car maybe
yes,
instead of buying.
yes. You see, he used it backwards.
Gotcha.
Turn it around.
Okay, so let's say I know about cars, so I'm helping you sell your car. You want to get 30,000 for your car that you're selling, but people are coming to buy it and they're offering us 15,000. Do you think we can somehow get that up to 30,000, double the price?
Well, the better ending would be, how would we?
How would we get that?
All right. So I'm going, Jose, go ahead.
Would the doctor analogy work here? Taking the
Doctor
medicine?
analogies always work, particularly if they're proctologists. So let's hear it.
If you were sick and you were taking Tylenol and your system don't go away, how long are you going to continue to take the Tylenol until you try something different?
All right. Well, you're the doctor. I'm expecting you to help me get better. I mean, it's a great one to have in your quiver. Not a perfect fit. Okay. We're going back to Susan, then Don.
So you're telling me that you want to lose weight, you want to lose 50 pounds, but you continuously eat pizza. How does that work?
I'm not eating anything. I'm not eating anything. I'm talking to you as a professional, and I would expect you to be able to help me make this move. Don.
Do you have stocks?
No, I don't think so. I got
okay. So if you had IBM stock and you bought it at $30 a share, and today it's worth 20, are you gonna call a stockbroker that can guarantee you to get more than the market demands?
All right. So I like the creativity. There's a really good one out there. I'm waiting to see if I hear it. No, I'll put you out of your misery. So, Paulina. So you're the seller. So I want you to be a buyer now. So when you said you want to downsize, right?
Mm-hmm.
So we got your home is sold. Now you want to downsize in a house out there that you like. is it's worth 425,000. And the seller's asking 495,000 and they're not budging. What would I have to say to you to make you want to buy that house?
Nothing. I will just ask you to find me the same home that's gonna sell for 425. That's asking 425.
So you want to buy a $495,000 house at 425, right?
Yes.
And there's no way you would pay more than 425, right?
No.
And how many years would you be willing to wait for that?
To buy a home that's asking 495 for 425?
Yes.
Well, I wouldn't have. If the seller is not willing to budge, I'm just gonna go and look at a different home, maybe in a different area.
Sure.
Where
Got it.
to buy.
You're looking for a seller that wants to sell $100 bill for $45.
Mm-hmm.
So do you think there might be other people? Here's the thing. If that was a real scenario, would that seller have other options? Could they sell it for more than $45?
Probably.
And if you were the seller, would you sell it for $45 or would you sell it for something higher?
No, I would sell it for 110.
Yeah. So you see what we're doing here. You know, again, it's totally unrealistic. But what you can see is the power of the story of the parallel, particularly if you change the buyer to seller, seller to buyer. And at some point in time, how many people remember my fishing in a parking lot story? What's that one, Don?
Well, essentially we're fishing in the we're fishing in the wrong pond. How many fish are in a parking lot?
That's very weak at building the story. I don't even quite get it. You got to build the story.
Okay.
Miriam, were you trying to do that?
Yes, I'm gonna tell her, okay, you wanna buy the house for $425,000, and then I'm gonna tell if you wanna buy it, if how are you gonna react it, if you gonna wake up tomorrow and this house is gonna be gone, and how do you feel that? And then I'm gonna write the offer for that. And then if she says, I don't care.
She would say, I don't care.
Uh,
And hang on a second. Could you also do an analogy where you put yourself in the buyer's shoes and show them that buyers aren't going to pay more than the home is worth? Okay, how would you do that, Anne?
No, she's asking, she's selling, she wants to buy a house for $425,000, and the house is gonna vote it for 95, and then she wants to offer for 125,000.
I get it. Well, how would you handle that?
I'm gonna.
Hang on, no, Anne, get your hand up.
Yeah, I was going to say, going back to like the seller scenario where she wants you to sell it for more than the home is worth, I'd probably use an analogy kind of similar to the car one and say, okay, let me just describe a scenario to you. If you were a buyer and you were looking to buy a car and you knew you'd done a ton of research, you saw it at a bunch of other dealerships, and this car was worth $15,000. But you went to this one dealership and it was worth $30,000, or they're asking $30,000. Would you pay that $30,000?
Right. I did the same thing with her on buying a house. I said, well, what could I say that would make you want to pay $30,000 for that car when it's only worth 15?
Yeah. And I was going to go like, if I added the floor mats and did a wax job, would you still pay $30,000? No. What if I threw a party and had fireworks and everything? Would you pay $30,000 now? No. So no matter how much and how amazing my marketing is, I'm not going to be able to sell the home for more than the home is worth.
So We'll go back to you, Don, really fast on building the story. Sometimes you get to the end of the book, you don't build the story. But here's the thing that I'm going to talk about the market. Just a second. Markets go up and down, and our market went up, and yours did too, probably, pre-22 or 23. And now most markets are down a little bit. A lot of sellers are trying to hold on to that money. I mean, it's gone, but they wish they would have sold back at the peak, right? And so one thing I'll go to here next for a few minutes if you want to work on it. How do you have a conversation with a seller that's waiting for that unicorn moment? So we'll do that in a second. And I see Susan's hand. We'll come back to you. Put your hand up if you want to be part of this. Don, I want you to build the story of the guy fishing in a parking lot.
Okay. So a guy is fishing in the parking lot. Is it a question of him? He's not catching fish. Is it a question of him? Is it a question of the bait?
One of the keys, but one of the keys to telling the story, and I am not a great storyteller. That's not my gift. My gift is quips. I've got a very quick wit and I can zing people, but there's an art to telling stories. So imagine you're driving down the street and you see a guy get out of he parks his minivan in the Target parking lot. He gets out of a chair, he's got his fishing hat on, sits down, and he casts his rod with, you can see he's got a worm on the hook, poor worm, and it's in the parking lot. What would go through your mind? You see what I'm doing, and there's a bazillion ways to do it. You have to build it up. You have to get them into stories work because there's emotion involved. My gift is zingers. You know me, I'll give you a zinger. There's no emotion other than humor, or if you get it, they might get it. So you see, what would you think, Don, if you saw a guy fishing in the parking lot?
I'd say he's got a screw loose.
Okay. Well, that's what we would be doing. Trying to sell your house at $495.
Okay.
So do you want your neighbors to think you have a screw loose?
No.
All right.
They already know I do, but that would be more.
All right, we got some hands up. Okay, so we're going to the
Thank you.
We're going to the scenario where they want more. They want what the market would have delivered 2 years ago. All right. One question. We go, Susan, Paulina, Tanner, and get your hand up digitally.
Well, I wouldn't have that conversation. I would show them all the properties that sold for $500,000 and what properties sold at $425,000, because unless you have one extra bedroom, 1,000 square foot larger, that's what you're gonna get. So show me how, Denny, to get $500,000 for your property when all these $500,000 properties sold has 1,000 square foot more than yours, had an extra bathroom, have an extra bedroom. You don't have 3 bedrooms and 2 baths.
So here's the challenge of telling. All right, so I'll be that seller. Are you saying? You said my house is worth $425. I want $500. Are you saying with 100% certainty I can't get more than $425?
I'm not saying it's 100% certain, but I'm saying for us to market it and not look like Looney Tunes, we will.
Are you concerned with helping me get my number, or are you looking like a Looney Tune?
If I could get you the number, it's all great for all of us.
All right, got it. So are you saying then there's not a chance I can get more than $425?
I'm not saying there's not a chance.
Are you saying then, hang on, I'm a D and I'm your seller right now. You opened this can of worms. Are you saying then there's not a chance I can get more than $450?
I'm saying there's a chance that you may not get 500 or more than 450, because show me, unless you can show me in your house you have an extra bedroom, extra bathroom, or 1,000 square foot more. Like
have you ever seen in your illustrious real estate career something that happened that you could not explain?
In the right market, yes. But right now,
that's the bullshit.
Market.
That's bullshit. So, are you saying then there's not a chance, unlike the Jets winning the game? Are you saying there's not a chance that I can't get somewhere close to 500?
There is a small chance that you can.
Now here's the thing right now. Here's the thing right now. This is just the way I roll. I know how Susan rolls. She's a little bit more, she has a more narrow. Now here's what I want to say. Obviously, there's nothing you can buy. You can't buy a doghouse where she is for 500,000. So it's really about maybe 2 million, right? But here's the thing. Is it possible that the sellers want more than the market than your comps can show? Yes. It's no different than a patient going into a doctor that does not want to be treated with that aggressive of treatment. Is it possible the patient wants a less aggressive treatment? Yes. My question is, if there's a chance, do you give it to them?
Yes.
Polina.
Yes.
I had a question based on what Anne said. Can I make a comment on that?
Yeah,
Or
sure.
ask a question? So whenever Anne said, no matter how much marketing we do, we can't sell your home for more than what it's worth. Well, to that, I would say I'll then hire a neighborhood expert who sells a lot in this neighborhood, and they will get me the number.
Okay. So Anne, you want to be the seller and go toe to toe with Polina?
Sure, I'm the seller on this one.
You're the seller, yeah.
So yeah, I'm just gonna go ahead and hire a neighborhood expert that knows the neighborhood and can get me my number.
And how certain are you that this neighborhood expert is going to get you that number?
I've seen her sell all the other properties for 10% more than I thought, so I know she's gonna do that for me too.
Mm-hmm. And are you certain that?
You see now, here's what you're doing. All right. My question is, I'm going to give you a hint. What's the better way? What's the better way listing?
I'm going to list it for $495,000, and we're going to give it a chance.
Yes. All right. So are you saying, Ann, that if we agree at the price at $495, are you willing to work with me today?
I still want to talk to the neighborhood expert first.
Okay. So now, all right. Now what we've done here is take it off what? It's not the initial positioning. My conversation with her on price is done.
Yeah.
Because that's not it. If she's not ready to hire you and on some other things, and you still have the thing about the price, I'm done with that topic. Does that make sense to you?
Yes, it does.
Does that make sense to you?
So where would you go then?
All right. So obviously then, is there anything that could take place in this interview today, Ann, that would make you feel that would cause you to feel comfortable moving forward with me?
I think that I really just feel like I need to get a second opinion before I move forward.
Okay. Well, again, if you've stepped into that interview and you didn't know that ahead of time, shame on you. Because you want to find out, are you interviewing? And they may have said no, maybe this just comes up. You mentioned neighborhood, so this is wrong. I see your hands, Tanner and Maria. We'll get to you in a second. I promise to go really fast. So you said you wanted a second opinion with a neighborhood expert, right?
Yep.
Who is the neighborhood expert, by the way? Now I'm going to ask that. I'm not going to, even if I kind of know. Who's the neighborhood expert?
Max.
Who?
John Smith at Remax.
And why do you call them that?
Because I've looked online and done some research, and he's sold 75% of the homes in the last 2 years in our neighborhood.
So I'm going to ask you guys, okay, so if you're going to go in a listing appointment and they got a home listed in Belmont Stakes, or where's that place? Wellington, where Louise is going to have a mansion one day. Would you have done maybe a lookup and see what has sold? Would you have taken any kind of a look at who does most of the business? Do you think it would be a good idea if you're going into a neighborhood that has decent turnover that you take a peek at? Who's the number one listing agent there? And even if you hadn't, and you have your computer there, would this not be a good thing? All right, well, this is interesting. You know, I do a lot of work here. I know John from Remax. You know, I've known him since he's been out of prison. So I tell you what, why don't we look up? No, I got the wrong John. I'm sorry. So, well, let's just pull this up really.
Oh, no, he didn't just say that.
So let's pull it up really fast. You know, what's interesting, You said he sells 75% of the homes here, right? Do you know if he lives in this neighborhood?
That I don't know.
Okay. Well, here's a list of the homes that have sold in the last 12 months. Now I can pull up and I can sort them by the listing agent's name. Well, you see, over the last 12 months, he sold 7 homes. No, sorry. He's listed 7 homes. Let's take a look at how many he's sold.
Okay.
He hasn't sold any of them.
Okay.
He was a listing agent.
Okay. And what about you?
Okay. Well, I guess my question is, are you interested? Now, notice now she's coming back at me with a sharp stick. So my question is, are you looking for someone who sold a lot of homes in this neighborhood, or basically has sold a lot of homes everywhere?
I'm looking for somebody who's just sold a lot of homes, probably everywhere.
Right. Because I mean, what if you had an orthopedics? Here's the parallel. All right. So who's with me? Where's Daniel? This is a parallel. So what would you hire an orthopedic surgeon to work on your shoulder because they did your neighbor's home shoulders, or they did, and that's all they did? Or would you hire someone as a world-class expert that could live in Milan, Italy?
Yeah.
You see what I'm doing? I'm changing the base. And by the way, and I'll go to your hands. You find someone who is a specialist in a neighborhood, and I am one. You're going to find the probability that we're selling our listings isn't that high. So they're going with a neighborhood expert, but the neighborhood expert is a listing agent, not the selling agent. And so the way you counter that is, well, notice of all the homes that have sold, and Don, this is kind of true in most neighborhoods, there is not one agent out there that dominates bringing buyers to a neighborhood.
Correct.
So you would say these buyers are coming from outside the neighborhood. So here's the issue is the listing agent just puts up signs. My question is, would you want to hire an agent that has the buyers are coming from out here? Don't you think that would increase your odds? Anyway, hands up. Maria.
Yes, I'm telling him, I think I'm.
Wait a minute. No. We have more than one Maria?
Yeah, no, I'm here.
All right. Yeah, Maria, go ahead.
Similar question, a similar objection. Do you want a realtor in a neighborhood, but not because they sold a lot of homes, because they are like they're close nearby to you, and that's why you want to go with them.
So they want to go with a close by agent?
Like, yeah, so let's say there's an agent in Naples, and you want to go with an agent in Naples rather than an agent in Sarasota because they're just closer to you.
In the home, where are you?
So I'm in Sarasota, and you want to hire somebody in Naples because you're in Naples.
Well, I'm kind of confused in the scenario. If I were talking to a seller in Sarasota and I do Naples, I would agree they should hire somebody from Sarasota.
But let's say I'm shooting my shot and I want to see if I can compete with that agent. What would you suggest that I do?
Hey Maria, other than the location, is there any reason that you wouldn't
No,
choose
just
that?
the location.
Okay, and is the location of the home also in the outside of my area? Is
Yes.
the home and the seller in Naples and you're in
Yes.
Sarasota? Okay. So then, yeah, I agree with Denny. I wouldn't fish outside of my
I
area.
see this happen all the time, guys. And I know like you're in a big area, Denver, and Denver. Most agents don't cover all of Denver, plus all the different areas, the ski slopes, blah blah blah. I'm kind of I see agents all the time in Florida. So imagine Florida, and I'm in the Gulf Coast, and we have Miami people, we have Sarasota people. They're an hour and a half away, and they're working with someone, and they want to show property over here. It is a nightmare. They can't use our lock boxes. They're calling us. And first of all, are there nuances in markets? Yes. Now, I have never, and my team member, except for maybe one county north, would be Charlotte County, Punta Gorda. It's a different MLS. Do you realize that you're not helping your clients that much if you step outside your little zone? I know an orthopedic guy can do or a gal can do a shoulder anywhere, but there are nuances, and you driving back and forth, and I know what you think about. You think, well, you know what? These are my friends. They want to buy $1 million house in a golf course community. You think you're going to go up there on a Saturday, they're going to find a house and buy it, and there's $1 million. Well, what's the probability they're not going to want to make a decision on that Saturday? They want to go back on Sunday, Monday, Tuesday. And then we finally find a house. They got the inspector and all this. You're making 15 trips up there for one transaction. What's it costing you back home? So, Maria, so I'm not a big fan of it, but there might be another reason why you want to have that conversation. But generally speaking, I don't want my agents to go outside our area, because there's different nuances, and you can't get to the beach without waiting in traffic for an hour. Does that make sense to you guys or not?
Yes, thank you.
Yeah. All right, Tanner, we got time for one more.
Oh man, I'm sorry. I just wanted to participate. It's okay. I don't have anything. It's all right.
Well, I got time for one more. Who wants to go?
I have not a different scenario, but here's just an observation. This is a really good time for someone to upsize and move into the area that they couldn't afford previously, right? And I would be happy to sell. I wouldn't sell my home. I'd convert it to a rental. But if I needed to sell to buy something else, this would be the time that I would absolutely sell my home for a little bit less, because I'm going to buy what I want that's larger and nicer for a little bit less. I would see a benefit to that.
Can
I agree.
Can I add something to it, Luis? Maybe this could be role play. Imagine you have a client who's looking into like $800,000 single family homes, but there's also multifamily homes that could benefit them better based on, like their old financials. Maybe how could we articulate that benefit to them without pushing them to that decision?
I don't know if this is going to answer your question, but this is what I have come to learn. It isn't always the case that the home I think would be the best fit for the client is the best fit for the client. They prefer something else. So I play Switzerland. I just give them information and make sure they make their best decision. And it might not be my decision.
That's good advice for working with a divorced couple too. Maria has a hand up, and David, you had your hand up. Anything else really fast before we go? You took your hand down. David, did you have something? Anything out of today, guys?
Always. Yeah.
Yeah.
Always.
I got to preach a little bit because I didn't have to share my wisdom with Matt. So you might have a benefit or a deduct instead of having two brains. But we were able to do it a little bit differently this time. So what did you hear that made it worth your while? This one makes my
you got bags of cash sitting on your front porch. I've never heard that one before.
Right. Well, the analogy really, this is what I said in front of 1,300 people last night. It happened in our area in 1979. Someone was driving down kind of a deserted road, saw on the side of the road duffel bags and some safes. And they pulled over and opened it up. They had all these cash is like $4 million in cash alongside the road. Like, who wouldn't want that to happen? I think, man, that'd be great. Our sellers had that happen in 2000 to 2022. And every year that goes by, the people, they're losing I call it windfall equity off their porch. And one of the strongest questions I came up with in a role play one day, when you have a seller that's so stubborn in a declining market, if you dropped $100 bill or a $20 bill, would you take the time to pick it up? Of course they would. Well, that surprises me, because you're watching dozens of $100 bills blow off your porch every day, and it doesn't seem to bother you.
I like the fact that there is stories and the facts.
Yep.
Yeah, right. There's a story and the story. All right, guys. Love you, mean it. See ya.
Thanks, Danny.